VICI Properties stock, ticker symbol VICI. This stock is down 8% year to date, which is a decent drop of course. And on the 22nd of February, VICI presented earnings with a beat on both the EPS and revenue. And most people love VICI stock because of the dividends, and I understand why, with dividend yield at 5.5% and some great growth track records. And with the stock coming down a lot lately and earnings just released, it is the perfect time to do an analysis. And I'm very excited to see what you guys think about this stock, so please let me know your thoughts in the comments. My name is Thomas and this is Thomas Invest. I'm an investor looking for great stocks at great prices. So what does VICI do? VICI owns one of the largest portfolios of market-leading gaming, hospitality and entertainment destinations, including Caesars Palace Las Vegas, MGM Grand and the Venetian Resort Las Vegas, three of the most iconic entertainment facilities on the Las Vegas Strip. VICI Properties, geographically diverse, consists of 50 gaming facilities across the United States and Canada. And when we dive in the recent earnings report, we see that revenue increased 21% year over year, which is an insane number of course. Net income increased almost 24% on the total number, and 15% on a per share basis, both looking really good. AFFO, one of the most important numbers with REITs, increased 17% year over year, and on a share basis 8.8%. This is because VICI issued 7.5% new shares year over year. VICI announced the acquisition of 38 bowling centers, which is also very interesting. Next to that, they announced the acquisition of the leasehold interest of Chelsea Piers, New York. On the full year highlights, we see that revenue increased almost 39% year over year, so growth is coming down a little bit. It's the same story with the net income and AFFO. Dividends were declared at $0.41 per share, a 6.4% increase year over year. And with AFFO sitting at $0.55, the dividends are covered pretty easily. For 2024, VICI has a AFFO per share range of $2.22 to $2.25, which is slightly higher than the $2.15 reported in 2023, so this looks good to me. In here we see that total assets is more than double the total liabilities. To me this looks good as well. In here we see that the most of the income is coming from Caesars, MGM and the Venetian Resort. In terms of diversification they could do a better job here, but this is something that VICI is really focusing on lately with all the acquisitions, so I'm not that worried. And now that we know more about the company, it's time to check the fundamentals of this stock. But first, if you made it this far into the video, I want to thank you a lot for watching this video. Make sure to subscribe to my channel to receive multiple analyses every week. And also join my Discord channel for free to meet other people within the community and to talk about stocks. It's completely free, so don't miss it out. Let's continue by diving into the fundamentals. VICI is a 31 billion market cap company. PE ratio is not a fair metric to use with REITs, so I'll be using the price to FFO instead. Right now it is sitting at 12, indicating they might be undervalued. Later in this video I will show you my 3 price targets for VICI stock, so make sure to watch until the end, because price to FFO is only telling a small part of the full story here. Revenue is at 3.6 billion, and in this graph we see that revenue went up in the long run. For a REIT, this looks really steady and consistent. We see that margins are going up and down quite a lot in the long run. Most recently they started to increase again, and it would be nice if they can sustain current levels. EPS is going up in the long run. It's not really steady and consistent, but that's very common for a REIT. Analysis expect that in the coming 2 years EPS will go to $2.74 per share, with some decent growth in 2024, but for 2025 they expect almost no growth. For the revenue it is also looking pretty interesting, with 4.36 billion revenue expectations in 2026. In the upcoming 2 years there's almost no revenue growth expected, but in 2026 things look better according to these analyses. Return on assets is sitting at 3.1%, which is a low number, even for a REIT. Return on equity looks pretty good, and the most important number, return on invested capital, is sitting at 4.9%, which is again a low number. But it is slightly higher versus the 5-year average, so that's the silver lining here. Current ratio is at 2.97, which is a decent number for a REIT. Historically, the numbers didn't look any good, but they did a good job in the most recent years. Right now, VICI has 17 billion in debt, and I prefer companies that can pay down at least a big chunk of the total debt with the total cash. VICI has 524 million in total cash, so they can't pay down a big chunk of their total debt. This is something that I don't like. So it's very important that free cash flow is growing, since this is used to pay down debt of course, but also to buy back shares, pay dividends and all other things. And here we see that free cash flow is going up in the long run, which is a great thing. Shares outstanding are increasing, which is very common for a REIT, since they increase shares to raise capital. But when shares outstanding are decreasing, it increases your ownership in a company, increases the EPS, lowers the PE ratio, and makes it easier to maintain and increase the dividends. And since we're talking about dividends anyways, dividend yield is sitting at 5.5%, which is a great number. Annual payout is at $1.66 and payout ratio is at 64%, which is below the average for REITs, so these parts look good to me. The 5-year growth rate is sitting at 10%, looking really good. And on top of that, they increased the dividends for 5 years in a row, which is really nice. And here we see the dividends paid since 2018. They used to increase the dividends at a high rate. And we only see a few years of history, since VICI doesn't have a long history. In this graph we see the expected dividends in 2024, 2025 and 2026. Of course this is an estimation and can be highly impacted by results, but it gives you a rough indication. It's expected to increase at slightly lower numbers in the coming years. And overall these dividends look really good to me, but how about the historical returns? I decided to compare VICI stock with the overall market, in this case the S&P 500. On the 5-year chart we see that VICI underperformed the S&P 500, but only with a small difference because of recent events. In total, VICI returned 85%, while the S&P 500 is sitting at almost 98%. And keep in mind this is including dividends. On the 1-year chart it looks pretty interesting, with VICI returning minus 5%, while the S&P 500 is sitting at almost 29% return. On the 6-month chart it is again the S&P 500 that is beating VICI stock with a significant difference. This time the S&P 500 is sitting at 15%, while VICI is at 1%. On the 1-month chart it is again VICI that is underperforming the S&P 500. So bottom line, VICI underperformed the S&P 500 long term and short term. And with the stock hammered down quite a lot, it could be an interesting buying opportunity. So is this the perfect time to buy VICI stock? Well, let's check the 3 price targets that are created using the Everything Money software, which is one of the best tools out there. I'm using a low, mid and high assumption to get the 3 price targets, starting off with revenue growth. For the revenue growth I'm filling in 6, 8 and 10%, based on historical performance, their own outlook, but also because of the analysis. For the profit margin I'm filling in 66, 68 and 70%. And for the free cash flow margin I'm putting in 58, 62 and 64%. For the PE ratio I'm putting in 12, 13 and 14. And for the price to free cash flow I'm putting in the same numbers. My desired annual return is 15%, since I can get an easy 10% average annual return with owning an ETF. Usually I put in 12.5%, but I want to build in a higher margin of safety here. Right now, VICI stock is at $30. I hit analyze, and we see a few green numbers. And since this is a REIT, I'm only focusing on the discount cash flow value. We have a low price target of $23. We have a mid price target of $29 and we have a high price target of $36. To me, the mid to high price target is the most justified here, indicating that this stock could be undervalued based on these numbers. My final conclusion is that I really started to like VICI Stock as of lately. Their niche focus always interested me, and with the recent earnings report they showed that they are capable of still growing and diversifying as well. Most fundamentals look really good to me, and the growth numbers are pretty impressive. Next to that, for a REIT, they are performing quite steady and consistent. And from a dividend point of view, I really get excited with solid dividend growth, and it is also looking like a really safe bet. From a value point of view, things also look pretty interesting. My price range is $29 to $36, and right now they are sitting at $30, meaning at the bottom of this range. So I put VICI on my buy list, and I think I will open a position in VICI stock anytime soon. They are currently not in my portfolio, but I'm really bullish on this company. And remember to always do your own research and never fully trust on what I or other YouTubers say about a stock. I'm not a financial advisor, and this content is just for entertaining purposes only. I hope you liked this video and I did bring some insights of the company to you. I would really appreciate a thumbs up and make sure to subscribe to get notified when I'm posting a new video. Thanks for watching, and I will see you in my next video.